Good evening everybody, welcome back to a Chart Nerd Technical Analysis video. Today we will be discussing OPUL, the ticker is OPUL against USDT on the weekly time frame. I was recommended by one of our members in the community to have a look at this project. I'm not a holder personally myself, and it is the first time that I'm actually having a look at this chart. I have heard of the project many times before, but I haven't had the chance to analyze it. So I will try to give you my utmost honest opinion here and tell you what I think is occurring right now. So what I think is going on is potentially we might have lowballed out here. Potentially we might have lowballed out on the week of the 8th of July, so 2 weeks ago. I think this is maybe where we've put in the correction for OPUL. Now, to see this as confirmation, what we've got on here is a key resistance zone where we've had 2 points of contact on this key resistance at 31 cents, and we've also got this key support zone down here, which is our current all-time low and key support, which sits at 0.044. Now, you'll notice that I'm just going to give a quick breakdown before I do start explaining why I think the lows might be in and look at both scenarios here. But what we've had since this top out in 21, we had this 1, 2, 3, 4, 5 wave correction, which is where we started building this key support zone. And at this point, off of that 5 wave correction, we then started building a base. So what you'll notice is on this, so we had the 1, 2, 3, 4, 5. We found the base at 0.04. We rallied up into previous support of the wave 3, met it as resistance, then came back for a second point of contact on the support zone before building a double bottom structure and actually breaking out in January of 2023 and creating this resistance zone where we ran up back into previous support of March of 22. So I hope that kind of isn't too confusing for you guys, but you'll notice again we had this key support back here. Once we touched the support zone, we ran back into it as resistance, came back for a double bottom, broke out in January and ran back up to the key resistance zone, which was previous support back here in 2022. So this is how we've sort of created this range and sort of accumulation zone that we're in right now. Wanted to give a breakdown of how we actually got here, and you'll notice that the market works in waves. Okay, so we had this really impulsive wave up to resistance. From this resistance points, we had another 5 wave correction here where we had a third point of contact on this trend line, okay, at 0.04. So initially what we've had now is 2 large bottoms, or a sort of double bottom off this point of contact. Now what would have been nice to see is that on this way up here in this impulsive move, this key resistance zone being taken out, and you can see we did have a nice wick up to around 40 cents, but we didn't close above this previous key level of support that we've now met as resistance and created this zone. Okay, so this 31 cents, 32 cents is very strong resistance, and at this point this is where we've now either fast forward to where we are now. Sorry, I didn't actually say off this low. Off this low here, you can see we had this A, B, C, okay, and that's how we got up to this high from this low. But from where we are now in this sort of correction, for this to be the low right now, what we need to see is this be another ABC correction where we're coming back and we're putting in a higher low compared to this previous 2 lows here that we've had in the past. For that to be valid, we need to see this 0.069 low hold as support, and we have resistance above us that we need to get back above in order to remain bullish and back, looking to retrace back to this key resistance of 31 cents. So what we would like to see at this point where we've come up from this low, if we are getting rejected right now, we need to see a double touch on this key support that we're currently holding from the last 2 weeks and start building up some foundational structure where we're getting higher lows here, some sort of double bottom, and then breaking out and rallying back up to these ratios. Okay, and this would sort of give me the heads up that okay, we've had this large ABC correction, come back for some sort of higher low and start rallying back up, and this would indicate that this is where the low is for OPUL, and we've got these targets above that would be the next points of contact I would expect resistance, and they are at 16 cents and 20 cents on the way back up to this this 40 cent high that we're currently coming down from. So if this is the low, it would be nice to see another higher low over this week or next 2, build up a base, okay, get some sort of ascending triangle, come out, rally up to this golden resistance point, come back for a macro higher low, and then explode again. But for it to all be valid, we have to hold an ascending level of support and put in a higher low here, or come back for some sort of double bottom and eventually then break out, very similarly to how we did here. You see, once we put in the correction and finished the correction. We came to support, put in this double bottom, and eventually we broke out. If this is to be the case for the low, it would be nice to see something similar. We've created this resistance, come back for a double bottom on support, breakout, and off we go. Now, failing that, so just key points to take away there. If this is the low and we do start coming back for key support over the next week or two and holding 0.069, then these are my next targets in the coming weeks or mid to short term. From current price, it's around a 82% to a 125% move back up to these targets, and that way at that point we'll be well on our way back to this key level of resistance. But failing, if this is not the low right now, we need to look at both scenarios. If this isn't the low and we are looking to come back for a further correction, what could potentially be at play here is we've got this wave 1, wave 2, wave 3. We've just had a very shallow wave 4, and then we're looking for our wave 5 back down for a triple bottom. Okay, back down to this key level support, which I believe is about a further 50% move to the downside. But again, it has happened in the past from this level of resistance, so don't expect it not to potentially occur again. And even if it did, this whole accumulation range at this point, I think after this third point of contact, if it was to come into fruition, would be over. And I think at that point we then would start to rally up and eventually tackle out of this 31-cent high that has been key resistance since May of 2022. So that's my outlook for OPUL, guys. A triple bottom potentially. Equally, if we are to hold these lows in this ABC, we've come up now, we have to come back, hold a higher low or put in a double bottom, hold support, and look to rally up to those resistance targets at the golden ratios I had above in order to get back to this 31-cent high. I hope you've enjoyed my content today, guys. From Chart Nerd TA, take care, peace out.